The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off. Markets in negative territory. We got the non-farm payrolls coming out on Friday, but quite the sell-off yesterday. Led lower by NVIDIA shares. We'll jump into that in a moment. But you talk about a sell-off, and it is intriguing. So yesterday morning, all right, it's on to a little something, man. You jump over to the VIX. We got the VIX trading at 2256. I spent a portion of my program yesterday, if you were watching. Okay, in my program, I checked out at about 9:40 in the morning. I had an appointment. Our man Basil Chapman was kind enough to jump in and finish the program. The day was young, as Mr. Basil Chapman would say. Things were just getting started, even with the market in negative territory. You had the VIX at that time with a 16 handle. And what I was mentioning was, if you take a look at the S&P, and what I did was I had a chart yesterday going back about 10 days on a 30-minute chart on the Thinkorswim platform. And what I talked about was, man, you are getting a lot of 1% moves in this market for a VIX that is sitting at 16. I was on the air yesterday. The market was already in negative territory, but that's a 30-minute. We put things back to a 5-minute for the markets. We check in on where we were. And at 9:40, we were sitting at about 56.29. And you had 100 points to go before the end of the day, right? So keep your eyes on those, man. Doesn't mean it was a crystal ball, but there are some signs there pointing to the fact that, man, we had some volatility, and then check it out. Kaboom. You talk about an engulfing bar, man. This thing consolidates from August 19th to September 3rd, and you take out that entire consolidation area, which also correlates to this consolidation area we had near the top back in July as well. That is a dicey formation for markets. When you talk about wiping out everything there, we kick off this morning in negative territory as well. And yeah, we'll see where we go from there. But make sure you get your guard up, make sure you're positioned well to handle a potential pullback. Because, yeah, there's a very real possibility that we just get a healthy pullback in this market. All right? I'm going to jump around the beginning of the show before we do the roundup, because this is, I sent some of these charts out to my subscribers yesterday in an update. And what I was talking about was just kind of the natural retracement that's possible in some of these big tech stocks that have driven this market higher. You look at Microsoft from the lows of October 2022, a 382 just kind of brings us back to the consolidation area that we kicked off the year at. That's correlating almost to the high we had last July, that high of 366. We're at 410. That's a 382 retracement of the move higher. There's Microsoft for you. You jump over to Amazon. That 382 would bring you down to about 155. That's the area we were just trading at in the beginning of August. You're trading right now at 176. So you're talking about $20 could be possible on Amazon. You check out Apple shares. Now, Apple, we were going back to October 2022 on some of these, just being even a little bit more conservative on Apple, taking the run it had since April of this year. The 382 brings you back to 209. You're trading at 222 right now. And again, that was the most conservative there, right? Meta. This thing's been on a one-way rocket ship from $88 in October of 2022. A 382 retracement on Meta of this run we have going, 369. Okay, now I'm not saying all these stocks are going back to the 382, but it's important to realize the run these equities have had, they have driven this market higher. Okay, and we could just be in a little bit of a healthy pullback. You check out NVIDIA, the 382 brings you back to 91.78. 91.78. That's because you just ran from $10 up to 140. $10 up to 140. Now, NVIDIA had quite the day yesterday. You're going to kick things off down about $1.50 so far this morning for NVIDIA. But yeah, keep that in mind when you take a look at these markets. You get a little bit worried about the sell-off. You better be ready for a little bit of a sell-off here in terms of what's possible when you look at some of the runs that we've had in this market. I mean, something like the NASDAQ 100. You just look at the run that we had since the beginning of 2023. You almost double in share price. The 382 brings you down 2,000 points from where we're trading at right now. That's just a 382 retracement, a healthy pullback in a healthy market is what you could consider it. So we'll see where they go. But it is quite Quite a market, quite a volatile market, and we got a VIX in the 20s as we come into non-farm payrolls on Friday. So NVIDIA, yeah, you talk about it, man. Now, NVIDIA has 25 billion shares outstanding, folks. 24.53. You round it up, make it 25. It's simple math, okay? Just going back on this chart to, that's going to be 6 days ago. When is that? Last Tuesday, I believe, August 27th? Yeah, last Tuesday, we were at 129, and we were basically there a week ago, 128. We're down $22 from there, which is, my goodness, $550 billion in market cap that NVIDIA has lost since last week. Yesterday alone, the reason I bring it up, no, that's not the one. Where is it? Excuse me. Well, I thought I had the number in the headline, but there it is, $279 billion. It's the worst day ever for any market cap of any publicly traded company. Yeah, never happened before. Almost $300 billion. Remember how long it took us to get to $1 trillion company? And now we have companies where $500 billion gets wiped out in 5 days. You better watch out, man, in this market when you got that kind of multiples on that type of an equity. But we'll see where we go from there, right? Now you get a little bit of antitrust talking about, okay, but, you know, all things considered, folks, I wouldn't be too worried about this. And that's just one man's take, all right? But NVIDIA gets DOJ subpoena, an escalating antitrust probe, subpoenas to third parties in the case. They have a dominant position in AI because they have the best products out there, period. And that's why, you know, yeah, they're going to make sure that they're trying to remain competitive and not being monopolistic. But to a certain degree, you got the best chips out there, man. Nothing's going to stop you. So there's that element of things going on, right? Yeah, $279 billion rout yesterday. Still, the stock is more than double this year. So investigators have been contacting other tech companies to gather information. The San Fran office taking the lead. Yeah, NVIDIA wins on merit is what they say. And that's kind of what I see as well, you know. I mean, yes, I'm sure they're going to use their competitive advantage to their best benefit. And they're going to have to, you know, look at that number, man. NVIDIA is going to have $121 billion of revenue this year, up from $16 billion in 2020. Just absolutely wild, the run. So they have a little bit of a problem with the DOJ looking into their business, but all things considered, yeah, you know, this could carry out. There could be some waves that are made. But in the long haul, they're just using the fact that they make the best chips out there, and they're going to use that competitive advantage. And on the longer term, yeah, you're going to face some extreme volatility. $100 is going to be a critical area. That's where this thing gapped above when you really started to get to that 140 when you came out with the earnings in May. NVIDIA runs from 95 up to 140. We're back to 108 right now. You had a high out there of their earnings back in February where you kind of ran up to a high of 97.40. So just like that, we've almost given back 6 months of NVIDIA shares. You're trading at 106.42 this morning for NVIDIA. And yeah, we got markets rocking, man. Crude, how about it? We got a 69 handle on crude. If you haven't filled up those gas tanks, make sure that you bring those prices down. Hey, see, nonetheless, 69.97 for crude. We got a lot to talk about. We'll talk some gold off $4 when we get back. Stay tuned, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got markets slightly in the red this morning. NASDAQ 100 off 115 right now. Dow barely in the red. Russell off by 5. We talked about crude right at about $70. You see that? We jumped to $69.19 early this morning. We almost got a 68 handle in the price of crude. Now, you take a look at that crude contract. You pull up the 3-year weekly. We are at a critical area in terms of, yes, we've gotten lower on a few occasions. Okay, but look at this chart. Look at where $70 is on this chart. Just a visual representation, right? You don't have to be a master technician to see that this is a critical area. In crude, probably an area that you're going to face some support in that crude contract. We're trading at $70 to the penny. You make it below that level a couple times, but look at how each time you've made it below that level. These are weeklies. Most of the time, it's just a tail, right? You don't get a close. You get a tail. You trade higher, maybe you chop above, that's your weekly, you back it up on a monthly basis. Yes, we have some wild moves, COVID being one of them, when crude actually went negative, but nonetheless, $70 is where we're sitting at right now on a shorter term basis. That's been your floor, and we get to find out where we go from there, sitting at $69.88, the price of crude. Gold, a little bit of volatility this morning as well. Gold, you put it back to a 15-minute. Yesterday, we drive down to 25.05. Overnight, at about 5 in the morning, you're trading at 25.02. Right now, we're trading at 25.18, the price of gold. We check over in yields. So, quite the run. Higher price, lower yield yesterday. Overnight, you make it to 114.09. On that 10-year, we got a 10-year yield of about 3.84%. 3.84 is the yield on the 10-year right now. You jump over to the dollar index, DXY 101.63. We got the Fed coming up 2 weeks from today, September 18th. Wednesday, September 18th, that's Fed Day. And, we await the non-farm payroll number on Friday, 2 days from right now. About 48 hours from right now, we'll get that number. Of course, we get more data, but that is the last large data point, which could potentially throw a wrench into the Fed's plan to cut. All things considered, unless there's an absolute shocker one way or the other tomorrow, they'll begin cutting by 25 basis points. Yeah, we'll see where we go. All right, we got companies coming out with earnings still this morning. Dick's Sporting Goods, they're a little bit lower, down by about, what are we talking about? Well, they got a wide bid-ask spread right now. I think they're dealing with a conference call right now. Maybe it's ended. Began at about 8 a.m. Eastern time. Out with their numbers. And for just some context before we go into the numbers, check out this chart. That's your 3-year weekly. You go back to COVID, okay? COVID brings Dick's Sporting Goods down to $13, and you're trading at $230. That's almost a 20-bagger off the COVID low, all right? Now, this stock has just been relentlessly higher, and you know what is intriguing, folks? I remember sometime during COVID, it was remarkable that they had curbside takeaway. Dick's was just one of the first ones that really, they got the job done well. You know, stores are closed. They had curbside takeaway. I remember ordering a pair of sneakers for a birthday present, and I pull up to Dick's Sporting Goods like it's Outback Steakhouse. And it was right in the beginning of COVID where businesses were just at the beginning of making that transition, and boy, they handled it so well, right? But it blew my mind because, you know, times were changing so quickly at that point. You had never envisioned, just like an Outback Steakhouse, you pull up, you enter in the app that you're there, an employee walks out your shoes, they walk out the meal, the shoes, and they're there. Nonetheless, that is quite a chart. So you almost got a 20-bagger off the COVID lows, right? 260 would be a 20-bagger off the $13 low. You're trading at 232. Dick's Sporting Goods has almost performed as well as NVIDIA has from the COVID lows. That's what I was looking at the break. Yeah, you talk about it. Okay, NVIDIA, okay, for some context, this is your monthly chart for NVIDIA. This is what COVID looks like. And NVIDIA is just barely up more than a 20-bagger. Here's your COVID year, okay? Not as big of a pullback as some. You know, you weren't like you were in retail here. NVIDIA didn't have quite the pullback as some had, but you still traded from 791 down to 452 on NVIDIA, right, post-split. Point being, NVIDIA trades from about $5 to 108. That's 22 times multiple, right? Dick's Sporting Goods is up like 18 times. So you are almost rewarded the same if you bought Dick's coming in. Now, if you even go pre-COVID levels, all right, pre-COVID levels, Dick's is up 5 times. And that was after running the previous year. It's just, it puts in context how well this stock is doing. I don't have Dick's. I'm not pumping it. I should get Tommy some Dick's Sporting Goods when you look at this chart with the numbers I'm doing. Because you look at NVIDIA, you know, you came into, so what did I say? Dick's came into COVID at $50. You're trading at $250 about. NVIDIA came into COVID at $8 and you're trading at $108. So, yeah, they're up 12 times. I mean, it's just a remarkable run for Dick's Sporting Goods. And nonetheless, they're going to give it back slightly. You're off by $7 right now, but you're trading at $232 for NVIDIA. The one thing I will say, right, I had this formation up on my chart already before I took a look at this. This is going back sometimes probably. Look at how when you break above a consolidation area, what can happen, right? That consolidation area was at 148. You make a high in 2021. You make a high in 2023 in April. You test that high again in August of 2023. You kick off the year, and boom, you blast through that area, and look at the volume that you break away with it, right? February, well, I guess it's really in March that you do that volume when you accelerate to the highs. I thought it was this bar. Not quite. February, short trading month. But the point being, okay, I looked at it. You got a trading range. What's the range? Well, you know, this first run was from about $10 to $150. That's about $140 range. Well, you could make a case that the breakaway begins here at about $100. And where do you trade to? $240, $140 run, right? From this low of October of 23 up to the recent highs, $140 run. The run you had from COVID, $140 run. Might need to consolidate a little bit on Dick's. And this is where, you know, which is why I kicked off the program. It showed you some of those tech stocks. I'm not calling for a huge market pullback, but it is important to realize that when you have runs like this, the market may need to consolidate. It may need a healthy pullback, right? You see the types of pullbacks you've had in Dick's. My goodness, you trade up $140, and then over the period of the next 9 months, you trade from 150 down to 63. Oh my goodness. And before you know it, you're back at 242. Nonetheless, Dick's blows past earnings, but what are you going to do for me in the future? Cautious guidance is how they put things for Dick's. But yeah, earnings 437 versus 383, revenue 3.47 versus 3.44, net income 362 million compared with 244 a year earlier. Comp sales driven by both transactions and tickets. So more people paying more money in the store for fiscal year. Diluted earnings per share, $13.55 to $13.90. That's up from the prior guidance. Dick's only raised its earning guidance by about 18 pennies, even though fiscal second quarter earnings came in 54 cents better than expected. So that's kind of the worry there, right? They just beat by 54 pennies in this quarter, but for the fiscal year, they're only raising expectation by 18 pennies, so they're going to disappoint a little bit in the coming quarters, maybe potentially. Yeah, they were talking about theft this time last year, but some of these retailers, right? Target with some strong numbers, Walmart's on fire, Dick's is doing well. Stay tuned, folks. We'll come back for the open. Don't go away.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. You got an S&P right now, negative by 17 points. You got the NASDAQ 100 off by 131. The Dow climbs into positive territory. A little bit of green there, back in the red, 41,009. You get the Russell off by 8. Yeah, the VIX, about the only thing positive on my chart right now. VIX with a 22 handle as the volatility priced into this market going up as we come into that non-farm payroll number on Friday. Crude, gotta love it. $69.78, man. You're paying $3 a gallon right now. when the dollar ain't worth anything. What's the dollar worth? Not what it was worth 10 years ago, and you're still paying $3 for a gallon of crude. Pretty remarkable in that context. Gold, negative by about $6 right now. You check out gold, though, just kind of touching the 2,500 area. You touched it yesterday at 25.05 almost. You came in at 25.02 this morning. We're trading at 25.17 right now. And, it's intriguing that we're dealing with the 10-year right now that's approaching 3.8. We see the number that we're at right now. Forgive me, where are we? Probably 3.83 right now. We're sitting right now on the 10-year. 3.825. We'll call it 3.83, the yield on the 10-year. You jump over to Europe. The DAX down about 0.9% this morning. FTSE down about 0.6%. CAC roll down a full percent right now. You jump over to Asia. The ASX 200 down about 1.9. How about the Nikkei? 4.2%. Hang Seng 1.1%. We jump over to the dollar yen. We had some moves yesterday for sure. 147 to 145. That is a move for you. Unfortunately, we don't have our man Teddy Kegstad on today. We usually talk to him Wednesdays at 40 past the hour. He still put out an outstanding Tiger Forex report this week, yesterday, on a shortened week. Check out some of his webinars. We'll get him back on the program. Might get him back on later this week. If not, we'll talk to him next week as always. But yeah, a little bit of a movement in that dollar yen, and you back things up. That was August 5th, if you remember. Right, when you really had the recoil going, and look at how we've moved since then, right? You had that huge rollover trade going on. It brought the dollar yen to the strength of 141.67. You make it all the way back up to almost 150, and just like that, we're at 144.84 as you have the yen strengthening. And over that period of time, you've had dollar weakness going straight from 106 to 100.51. We're at 101.61 right now for that dollar. And you take a look at yields over that period of time. Higher price, lower yield. We're pushing the threshold right now with the 10-year, as I mentioned, approaching 3.8%. All things considered, gold holding up pretty well. As in, yes, the acceleration has been dramatic as we've seen the dollar pull back from 106 to 100.50. Now we're sitting at 101. You've seen the acceleration, but we've just been chopping near these highs, man, as gold, I think, has another leg up in it at some point. We will find out. Silver positive by 14 pennies so far today, 28.49 right now. They're talking about natural gas in the Tiger's Den. Natural gas trading at 223 right now. Yeah. Talking about potentially failing at maybe that upper resistance level. I mean, you are bumping into this August 15th high. That high 230. We make a high today of 227. We've paired that slightly. So yeah, we're testing that area you were at August 15th. We'll see where natural gas trades to so far this morning. All right, what else we got pulled up? We talked about Dix. Let's talk a little bit of the flip side of that in terms of Dix. Yeah, you better believe they're expensive, man. Dix is expensive. They got a great store, but boy, they are not cheap. On the flip side of that, you got Dollar Tree shares sliding after discounter cuts the full year forecast. Now, Dollar General took it on the chin last week, and Dollar Tree, DLTR is their symbol, takes it on the chin again, 15%. Yeah, and this is like, to be down 15% after the market gap down on Dollar General already, you might as well say this earnings cycle has brought Dollar Tree from 95 to 70. Okay, that's realistically the drop-off you've gotten on their earnings, because we already priced in the problem that Dollar General is having. And there you see them dropping even further off another 4%. Dollar General dropped from 125 down to 80. Okay, but Dollar Tree, with their numbers, just reiterating basically what Dollar General said. They got problems, man. People on the lower income threshold right now are feeling it. Full year consolidated net sales, $30.6 billion to $30.9. Earnings, $520 to $560. They originally were looking for about $31 to $32 billion. They were looking for earnings of $650 to $7. On a percentage basis, that is a huge miss, right? Their previous range was pushing the $7 range for earnings. Now they're allowing themselves room to come in at $5 per share on earnings. Whew. You talk about it, man. That's a huge difference when you got an equity that's trading at $70. Think about it. Over a quarter, you're going to cut earnings by 30%. Yeah. Same-store sales rose 0.7% at Dollar Tree. Yeah, so 2 chains is what they got here. They have Dollar Tree, and then they have Family Dollar, which carries more food in there. At Dollar Tree, same-store sales increased by 1.3. At Family Dollar, same-store sales actually falling. It's a tough spot. I mean, it's a tough spot. You see companies like Walmart. The reason why Walmart is doing better is they're attracting higher income consumers. Look at that chart, man. Quite a chart for Walmart. That's not happening on Dollar Tree and Dollar General. Okay? You're not bringing 6-figure income households into Dollar Tree and Dollar General in the same way that Walmart is bringing them in and padding their books. And when you're not doing that, and people on the lower income threshold, they're facing, some heat, man. They don't have the earning power that you need in this economy when you have inflation going up 20-25%. Yeah. And I remember when Dollar General came out last week, because what was going on was I was talking to my dad at one point. I said, if this isn't pulling up a firm, if this isn't a little bit of a heads up, man. So last week you had a firm, which is the company that does buy now, pay later, obviously servicing people that don't have all the funds they need to buy whatever they want if they're putting those on credit with a service like buy now, pay later. All right, credit, you can use credit in the best way. Sometimes it's a useful tool to create wealth. That's not usually the case using buy now, pay later plans. That's usually something that services lower income consumers that can't afford goods that they should probably, if they're making sound financial decisions, be paying for all at once instead of servicing that through debt. Nonetheless, what do you have? You have the buy now, pay later company doing gangbuster earnings and up 50% from $30 to $45 at the same time as you have the dollar stores trading dramatically lower because people with less income don't have as much money and spending power as they used to. That means something. How much it means, where it goes into the economy, how much that matters to the overall economy overall, that's another question, but we will see. But look at the Dow, man. Dow catching a bid. 41,143 right now. The market's catching a little bit of a bid as well. S&P's back to a 5-minute. Since we opened, yeah, that's a 15-point pop. Doesn't look like much on this chart, but that's only because the market traded down 160 points, folks. We're still up by 15. Stay tuned. We'll be right back after the break for more action.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Well, welcome back, folks. Market clawing back some of the losses of yesterday. We're in the green in the S&P. Up by 1 point to 55.42, and it is remarkable how this move looks like nothing right now on this chart, which just goes back 24 hours. But that's because you're comparing it to a move that's 160-plus move in the S&P. That's a 3% rip lower, 3% almost we're talking about. So, yes, we're not going to show up, but you just zoom in on the action from the lows this morning, and that is a nice little rally of the S&Ps right now. We are almost 40 points off of the lows at 3 in the morning, trading at 55.42 in the S&Ps. Let's jump around to some of the Magnificent Seven. We kick it off with the big dog. Apple down 1% this morning. Amazon shares down 1% as well. Microsoft down 0.6%. Google positive by 1%. Meta negative by 0.2, I'll tell you, folks. I was letting Tommy experiment with the Oculus Quest that I have in the house, and he is enthralled. And we keep screen time to a minimum when we can. We try and make it good screen time, of course. But it was intriguing seeing the future of virtual reality. He calls it the headset, and he is enthralled. 3 years old. Pretty remarkable. Interesting. But it made me think of Meta. I was joking. We got to get some more virtual reality stocks. But Zuckerberg, he's probably onto something, man, in terms of AI and virtual reality. But yeah, interesting. Most of the tech stocks a little bit lower today. Walmart shares down about 0.1%. We jump over to Netflix shares, up 0.4% right now. That's a weekly. Let's put it back on a short-term chart. We got Netflix trading at 678, down from about 700 yesterday. We check in on NVIDIA shares. Down to 104, back to 106, down about $1, down 1.3% for NVIDIA shares. We jump over to AMD. They're up by 2.7, and we jump over to Intel. Down 1.3% for Intel. We're going to talk a little bit of Intel, but we take a longer-term look at Intel shares. Start of the year at 50, you're trading at 20. Watch out, man. We go back even further than that. I mean, this one's a bonkers one, right? If you bought Intel in 1997, you're breaking even or even losing money. Breaking even or losing money. Yeah, you bought it at $20 in 1997. You were up almost 300% when it made it to 75. You say to yourself, well, we've pulled back, but I got a good entry point of 20. It's not like I'm one of those suckers that bought at the high of 2000 at $75. I'm in at 20. I'm bound to make money on the longer term being in at 20. Nope, not the case, as Intel is falling apart right in front of our eyes. Now, this one's an interesting one from Bloomberg. Okay, check it out. This one's out this morning, I think it is. When did they write this one? I was reading it early. Yeah, 5 in the morning, okay? And it's talking about the potential for the money that they're set to receive from the CHIPS Act, and they got some problems, man. And this money is almost $40 billion, $20 billion, I guess it is. They're supposed to receive $8.5 billion in grants and $11 billion in loans from that CHIPS and Science Act. But the way it works is that the Commerce Department is in charge of making sure that they are meeting key milestones after significant due diligence, and that process, which applies to all the CHIPS Act winners, has been clear from the outset and aims to ensure that the companies only get taxpayer dollars once they've actually delivered. And Intel, like other potential recipients, has not received any money yet, okay? And they got negotiations going on. Intel has grown frustrated, surprise, surprise, as their business is just tanking, with what it sees as government dragging its feet. And this is where government takes a lot of crap, right? For all the people that think the government just spends money wastefully, read this article to a certain degree, okay? It's not all waste, and we got to make some chips, man. And it's good they're holding to the fire. And I don't think it might be a good idea to give Intel $20 billion the way that company is performing right now. But yeah, the Commerce Department declined to comment. Intel said we're making significant progress on the U.S. projects in Arizona, but these things take a lot of time, man. And they have some big problems. They've slashed 15,000 jobs, right? And those cuts have drawn criticism. They have a board meeting coming up mid-September this month. Okay, they're going to evaluate things further. So look for any potential potential outcomes, news from there. Yeah, Intel I thought it was $40 billion. Intel would get the largest from the CHIPS Act, $39 billion in grants, plus billions and more in loans and tax breaks to boost domestic manufacturing. Now, look at this ramp up we've had as part of this. This is chip factory construction. Since that CHIPS Act, now you also got just the fact that the timing is everything. Of course, chip factories are going to go up with the AI revolution taking stage, but they are ramping things up, and that CHIPS Act is going to help. But Intel better get their act together, man, because they should hold their feet to the fire, because this company is struggling, to put it lightly. I've talked about before. Yes, maybe they have a turnaround plan, okay, but you're talking about a company right now that's only valued at $85 billion. Okay, that's only a $3 move for NVIDIA shares, which it's doing every single day. This is not a lot of money. And you think about giving a company valued at $85 billion, giving them $40 billion, right? That kind of puts things in context in terms of when you think about how large a sum of money it is for a small company in the grand scheme of things. And what they mention here is that Intel's expansion will hinge on market conditions. Okay, well, we all know that's how businesses work. But they usually ramp up factory shell capacity, then they outfit facilities with more expensive equipment portions subject to clear product demand. Okay, they bring up the case in point, how long things take. 2012, you had Obama at a facility in Arizona. Now, it's intriguing because you had Biden at that facility in, was it 2022, I think, when he was passing this? Where is it? Well, he was there. Okay. And what they talk about is how long it takes, okay? They delayed the project. They later touted it from Trump's Oval Office. So what, that had to be 2016, 17, 18. The factory became operational in 2020. And they're going to expand it in 2021. So you go from an announcement with the president in 2012 to becoming operational in 2020, 8 years. And so if you do that same math, coming in 2022, you're talking about 2030. Now, this CHIPS Act, the goal here is to establish a secure supply of cutting-edge chips for the Pentagon and making 1/5 of the world's advanced processors by 2030. Well, they better get going, because if they follow the same path as has been the case, they'll barely become operational in that facility coming on the line in 2030. Yeah, you talk about it. And then, how about their debt? Okay, we'll finish up with this as we come into the break. They got issues, man. Short and long-term debt in the millions. Look at this ramp up. Look at this ramp up in the last few years. Okay, this is debt in millions. And yeah, you're talking about doubling the debt load from 2018 to 2023 at a time that they're laying off employees. That's not usually how it goes. Debt is exploding. They're cutting to pay for that debt. And that's a recipe for tough things ahead, man. Market, Negative by 3, 55.38 right now. You get the Dow. Positive by 30 points. You jump over to Boeing shares, up by 1.3%. They're talking about Boeing in the den as well. Stay tuned, folks. We'll come back. We'll finish up the show, talk some other equities. Don't go away.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. You take a look at this market, and it's intriguing. So we get the Dow right now up 61 points. You go over to, and this is a pretty cool visualization in the Thinkorswim platform, the heat map, but it is intriguing. I always talking about it, right? The Dow Jones, a price-weighted index, makes 0 sense. I feel like you would get failed in sophomore finance classes. Like, they don't do sophomore finance, I guess, but call it whatever you may. For creating an index and deciding to price weight it, which has no bearing on anything. The point being, you see, even what they do is this visualization is based off market capitalization. But within the Dow Jones, you have a company like Home Depot with a market cap of $361 billion, but trades at $363, okay, with 1.5 times the impact of a company like Apple with a market cap of $3.4 trillion, and trades at $219. Nonetheless, you get the case, right? Amazon only trades at $174. Microsoft, they trade at $406. But Home Depot is a $363 stock, and you see how tiny it is on market cap on this chart compared to these big. Meanwhile, it has a greater impact in the Dow. But Point being, you check it out. Why is the Dow trading higher right now? Some of the financial stocks. We got JP Morgan is higher by over 0.5%. Visa higher by 0.9%. Goldman Sachs up 0.5% so far this morning. You get McDonald's up in the positive territory by 0.7. Johnson & Johnson higher. United Health, Procter & Gamble, Verizon, and Disney positive as well. You jump over to the S&P 500. Now this is where it's a fair representation, where everything is correlated to its market cap. Tesla up 3.25%. We got AMD up 2%. There's Visa contributing, up 0.9%. Berkshire Hathaway, yeah, they're a $1 trillion company. That clicked, I think, over the weekend or last week for the first time ever. $1 trillion company, Berkshire Hathaway. But they're up by 1% as well. And as I mentioned, some of the tech companies, GE, they're a little bit higher today. Lockheed Martin's up by 1.5%. We got the S&Ps making it into positive territory as I end the program. S&P's in the green, Dow in the green, NASDAQ off by just 29. We got crude trading at $69.83 right now. You got gold off by $8, and we got the 10-year sitting at about 3.83%. Folks, stay tuned. We got our man Basil Chapman coming up next. Thanks so much for kicking your trading day off right here. I'll see you tomorrow for the morning market kickoff. Have a great Wednesday, everybody.